Hi, this is Zach May with the chart rundown. It's Tuesday, the 18th of August. Starting off with the FTSE 100 with a slightly adjusted rising trend channel there from back in March. Puts the support line there, 10,680. Top of the channel still at 11,000. But the difference between today and yesterday is that we've got the approach for that channel there in 10,680. There are any dips towards that area, then that's what we'd be looking for as potential buy points to then take the market up towards 11,000 again. In terms of initial resistance, then it's 10,820, which was the old broken support from earlier this month. Moving along to the DAX, and here you can see that we've got the market finally coming off the top of that rising trend channel there from back in March, the level there, 26,500. Still hoping that the market will stay above at least on the right side of 26,000. Otherwise, it could be down to 25,600, the late July resistance. Obviously, the old 26,000 area, the initial July resistance for this market. But the gap down today, slightly disconcerting, even though the market's trying to bounce from that. It's a bit of a rug pull rather than anything else. Next up is the Dow, and here we had a bit of a pullback, and that's continuing. We're now below the top of the gap there, 53,600, while we're below that looking for 53,300 at the August gap floor. Worst case scenario is that we have to head to the floor of the channel there from April and the 50-day line, 52,300. But at the moment, just hoping that 53,300 would be the buy point. RSI in the mid 50s, so still in the buy on dips type of mode. Moving along to the cryptos, and here a slightly better price action yesterday for Bitcoin, but still waiting to see that confirmed by today's move. 65,000, that resistance line there from back in October. That's our initial target, while we're above the 50-day line, 63,700. Recent support, I suppose, around the 62,000 area, but not really much to go on. It really is a matter of whether we can break that 65,000 line and head up to the 200-day moving average at 69,000. Even if we do that, we are still in the downtrend that we've had since basically the early part of November. Moving on to Ethereum, and here the situation is that 2 steps forward, 2 steps back, really, but we are still hovering above a rising 50-day line there at 1848. Above that, looking for the 200-day moving average, 2004. Sometime over the next 2 to 4 weeks. Such a slow market now, hardly worth charting it, but you can see that we've had bounces for the RSI at the neutral 50 level, so this should resolve to the upside, even though the market doing its best to give the impression that it won't. On to the situation at gold, and here good session yesterday, but slightly disappointing today. We seem to have got, we're in a bull flag, hopefully, above a rising 50-day line. So the journey to the 200-day moving average at 45.07 should be relatively plain sailing. Recent support around 43.30. So we might have to head down to there before we head up to the 50-day line again. But with the 50 and 200-day lines both rising at the moment, that's effectively like a golden cross situation. So it should just be a matter of buying on dips and waiting for that 200-day line target, the initial one there, to be hit. On to crude oil, which with Trump's belligerent noises has improved a little bit, but not as much as perhaps he would have wanted it to. Here you can see that we've broken recent resistance around 84.60. Above that, looking for the gap there up to 87.80. The gap there from the end of last month. We've also got a line of resistance there at $89. So all the targets towards the upper 80s. On the downside, expecting this market to stay above, or at least on the right side of $80. Worst case would be the 50-day moving average, 78.58. But really, we're expecting this to be on the right side of the $80 handle. On to SpaceX, and here we can see that, we will be able to see that it's been a battle either side of the 50-day line there. Yesterday managed to sort of gap, or at least jump through it. That's at 143.62. That'll be a key level, a key feature on today's price action. Above it on the open, we're probably looking for the 150 zone. Best case would be up to the 200-day moving average at 156.81. Otherwise, another test of the low 130s up down to 130, probably 130, the favored area to buy this stock if you are so minded. RSI at 57, so it's still very much a buy on dips, and probably a buy on dips to the 50-day line at the moment. Moving on to the stocks, the UK stocks and energy green transition doing well at the moment. B-shaped bull flag above a rising 50-day moving average. Our initial target here was around 12.7 pence. Above that, looking for the upper parallel of that rising trend channel from October, as high as 16 pence by the end of next month. Very strong looking chart at the moment, especially after that sideways consolidation that we had for much of last month, and the actual, also the way that we found support above the rising 50-day line, which tends to be a continuation signal. RSI 50 plus rebound as well, so this looking very good at the moment. On to EnergyPathways, which has continued to disappoint in the sense that we haven't had the big move and the big result here that maybe lots of fans of the company have incessantly talked about. But initial resistance here through to 6 pence, valid while we're above. Sorry, through to 8 pence, valid while we're above 6 pence. And then after that, looking for maybe up to 10 pence plus by the end of next month if we can get a quick break of that 50-day line around 7.25 pence and stay above it, which we found difficulty doing since basically the early part of June. But the key here, watching the shares stay above that 200-day line, 6.3 pence, and finding support above that, which is bullish for this situation. On to a stock which was very keenly requested, which is Europa Oil and Gas. Here we've got the slow burn of the shares after the recent golden cross, or the latest golden cross this month, top of the range and top of the channel, 2.8 pence. Looking at that by the end of next month, while we're above the area of the 50 and 200-day lines, around 1.7 pence. Those people who like catching a falling knife may be looking at Ferro alloy at the moment, but a bullish divergence in there. It's more like a falling machete at the moment, but we've got strong candles in the last 3 sessions, so opening at the low, closing at the high, nice hammer yesterday. So looking for a minimum at the top of that falling trend channel there at 4.2 pence. By the end of this month, maybe as high as 4.4 pence, and filling the gap up to 4.5 pence would be the ideal scenario over the next couple of weeks. The other thing is we've had a bear trap rebound from below the late July support, and we've got bullish divergence there helping people on this one, but it has to be admitted this is still a falling knife, and the siren voices suggesting the company will raise money on any strength may be correct on that particular call. On to GCM, where it wasn't just a one-day wonder yesterday. We managed to break yesterday's resistance around 10.25 pence above that. Looking at the top of the triangle there from basically this time last year, as high as 14.75 by the end of this month. Ideally, now we stay above the 10 pence zone and the old February gap top as well in that area. On to Georgina, where, surprise, surprise, there's been no negative mudslinging, insults to the board, all that sort of stuff in the recent past. Maybe that's because the shares are up now 5x on the year, and a lot in the recent past as well. Just need to get a clearance of this 16 pence area. If we could do that, then it's 21 pence by the end of next month. Nice mid-move consolidation, 50 and 200-day moving averages both rising. So even if we have a dip back towards recent support of 12 pence, probably regard that as a buying opportunity. On to Great Western, which had another decent RNS today. It's been suggested this could be the next Guardian metal, and above 3.5 pence, so looking for 5 pence at the top of that rising trend channel from December, which would really help the cause. Double bounce above RSI 50 as well, so this is looking very good indeed. All we're probably missing now is for the 50-day moving average to rise, but actually it's now rising and we've gapped up above it, so it looks like we're on our way above that 3.5 pence level. So all the people hyping the shares up looks as though they may be right. Moving on to Huddled, which had a decent update today, and here, after the extended bear run that the shares have had, we are back above the 50-day moving average, around 0.44 above that, looking for the top of that falling trend channel, 0.67 pence by the end of next month, that trend channel there from back in November. This stage only well below recent support, recent resistance rather, 0.37, delaying the upside scenario. IMC is back in business and should be in the current environment. Here we've broken the falling trend channel there from February rather, and strong candle today. Well, broken through the 50-day moving average as well. Basically at a penny, above a penny, and above that feature, looking for 1.35 pence by the end of this month, or even sooner. Could be a decent move given how oversold we were going into the turnaround, and also that we've had a gap fill on yesterday's price action at 0.82. Moving along to the situation at Sabien, where despite a sort of slightly cooling RNS, that nothing may happen, all that sort of stuff, the market's decided to ignore it. Broken recent resistance there, 3.25 above that. Looking for at least 4.5, even if the shares fall away after that. Best case by the end of next month, up to 5.6 pence. And the 200-day moving average, which we haven't been properly above since back in October. On to a stock which we've been reliably informed is going to do well, which is Sintana Energy. Consolidation here above the 50-day moving average at 20 pence. We just need to get that to rise. We've also had a triple RSI 50 bounce as well, which suggests positive accumulation here. Top of the channel here at 27 pence. Looking for that by the end of next month, while we remain on the right side of 20 pence and the 50-day moving average. On to Total Graphite, the old Tira party, which we won't mention anymore. Here we've got bullish divergence with the situation of the lower lows, but higher RSI trace, falling trend channel there. Top of that channel there at 0.84. Need to see an end of day close above that to give us a move up to the gap top there, just above a penny from last month. So everything really hinging on getting above 0.84 and breaking that particular falling trend channel. If you're cautious, maybe wait for the RSI to get it back above neutral 50 versus 41 at the moment. Finishing off with Zenith Energy, where I was complaining recently that the shares don't respond to good news. Obviously, they did yesterday with the shares opening at the low, closing at the high, but today's slightly off on the peak of yesterday. But if we can stay at or near the 50-day line there at 4.5 pence, still have the chance of heading up to the top of the range, recent range, 5.5 pence by the end of this month. The other point to note is that the 200-day line is rising quite sharply, and once the 50-day line rises, which it should after yesterday's move, then we could see a reasonable move to the upside, more than 5.5 pence. That's it for me today. More updates tomorrow.